able to write off that are featured in your video. My name is Thomas Massey. I am a CPA, and in this video we will talk about common deductions for content creators and understanding how to utilize them to minimize your tax liability. This video is not considered tax advice, and you should consult with a CPA like myself or a tax professional for your personal situation. First off, what qualifies as a tax deduction? The general rule for tax deduction or claiming business expenses is that the expenses must be ordinarily and regularly used for the purpose of conducting business. And this can vary for the industry that you operate in or the industry that your business operates in, or for a content creator, the industry in which you're creating content for. These expenses or the nature of these expenses can vary. Examples of common deductions for content creators: the camera that you are using to create the content, the microphones that you are also using to create content, lighting fixtures that you may buy to increase the visual aspect of the content, as well as editing software that is used in creating the finished product of the particular content. Additionally, props, costumes, and set decorations for the content that you are creating are also deductible expenses that you are able to write off as a content creator. For travel expenses specifically, you will want to make sure that you retain documentation for all expenses that are being claimed, such as flights or car rides or mileage that is being claimed as travel expenses for content creating. And also you want to specify what the business purpose is in the event that you are ever audited when you are claiming these business expenses. Additionally, a home office setup allows you to deduct expenses that are incurred in operating your business or your content creation through your home. However, the space that you are using for your home office may be exclusively and regularly used for operating your business of content creation. What about the items that are featured in your vehicle automatically tax deductible? Well, that is a two-part question. First off, yes, but it depends on the content that you are creating to determine whether or not the things that are being featured in your video or in your content are considered tax deductible. Here are a few examples. First, think about a tech reviewer reviewing a laptop in creating content about that. The laptop that was bought that they are reviewing is a deductible expense. Additionally, a food blogger that is buying groceries to prepare a cooking video is able to deduct the groceries associated with creating that content. Additionally, a fashion influencer that is creating content in regards to a shopping haul may be able to deduct the expenses related to buying a particular fashion item, such as a purse or another item that is used for the purposes of creating content. Once again, you want to make sure that you are retaining documentation for the purchases and the nature of the business use that these particular items are being used for. In the event that you are ever audited, once again, your content is also can be used as documentation, but once again, you want to maintain the receipts and things of that nature that are being used to deduct these expenses. If the item is bought for the sole reason in creating a content video about that item is tax deductible. Once again, this portion is not considered tax advice, and you should consult with a CPA like myself or a tax professional based on your particular personal situation. I would like to stop the video here to remind you that if you are liking this content, please like, comment, or subscribe, and also book a call if you would like personalized assistance. One thing that you will notice that the IRS talks about when claiming or deducting business expenses is personal versus business use, or the phrase exclusively and regularly used for the purpose of conducting business. In this situation, in conducting or creating content, you may have a lot of items that may split and have a personal benefit or a personal use, as well as a business benefit or a business use. And these items are still tax deductible. However, you are not able to deduct the full portion if they are being split between personal and business. In claiming these deductions is even more crucial to retain your documentation. It is more crucial to specify what percentage is being used for business on a particular item, but also a particular class of items that are being used for personal and business purposes. Mixed use items often can be kept on a spreadsheet, and keeping the receipts to determine what the full amount was, but also using a percentage to be able to determine what the business use portion was that you're able to deduct on your tax return. Additionally, here are some examples of some partial deductions, such as a gaming console that may be used for the purpose of creating content for a business owner, but also for the personal use and being able to use it to entertain themselves outside of conducting business. You would want to specify the amount of the purchase that is considered business use versus personal use, 50%, 75%, 25%, based upon what you specify is considered business use. But if it is being used for personal and business, you are not able to claim 100% of that expense as business use. Some mistakes to avoid when deducting your expenses or looking for business deductions on your tax return is over deducting personal expenses that were not used for business. These things will not stand an IRS audit, particularly when you do not have the documentation that specifies whether or not it was personal or business, or the percentage that was used for business versus personal. In not keeping records, you're susceptible to an IRS audit, and the IRS will disallow any expenses that they do not deem as accurate and will require you to pay the tax that was owed in retrospect, including penalties and interest. Additionally, ignoring state tax rules. Some rules or some states tax business income differently than others, so there may be other rules or other things that may be applicable to your personal tax situation. Once again, I would work with a CPA or a tax professional to guide you through your personalized tax situation, to understand what things you are able to deduct and also the nature in deducting them, so that you are not missing out on these tax deductions, but also not making any mistakes in which you are having to pay back taxes, or the IRS is disallowing any of these tax deductions that were previously claimed. In all, if you are a content creator, remember that you are able to deduct things that are in your content creation. However, you will want to make sure that you are accurately keeping the records, accurately stating the deductions that you are claiming, and also ensure that the nature of the transactions are able to be included for the purpose of the content that you are creating. Consult with a tax professional or a CPA like myself on your personalized tax situation to ensure accurate and compliant tax filing with your particular business. My name is Thomas Massey. I am a CPA. Please like, comment, and subscribe to my channel for more CPA, tax, accounting, and business advice for small business owners and entrepreneurs.